Okay, everyone. Thanks for joining us. It's the happy hour time, like every Thursday. I'm Dan Weiskopf, ETF professor and also lead ETF strategist for the ETF think tank. And most appropriately today, also the co-portfolio manager of BLOK. And we're thrilled to have our special guest, Scott Melker, here. I'm going to hand off the mic now to Cynthia, and then Cynthia can hand it off to David, and David will hand it off to Scott.
Sounds good. I don't think Mike is here, so I'll just jump in. I am Cynthia Murphy, head of research for the ETF think tank. We're super excited to have Scott here. He's a tough get, so we really appreciate him making the time to come talk to us about all things crypto, because we're sure none of you have had enough of this conversation. So we have a lot more to uncover, apparently, I'm told. So I'm here to see it. I'm going to, David, introduce yourself a little bit, and then we'll let Scott quickly introduce himself for anybody who, I can't even imagine, doesn't know him yet, but it's possible. So you go, David.
How's it going, everyone? David Chikansky here, fellow portfolio manager within the Title Financial Group. I love that Cynthia is leaning into her new nickname, the Skeptic. So she's the only one not drinking the full crypto juice on this show, which was appropriate because you always need an other side of the coin. Scott, we're really excited to hear all things about ETF flows and what it's doing to the crypto world. But if you could, first and foremost, introduce yourself, the Wolf of All Streets, a little bit about how you got here, and anything that's relevant to you in your background.
Sure, guys. My name is Michael Saylor. Where is he? Oh, yeah. He did invite me, though, so I feel like I could be him. I'm his assistant, actually. No, my name is Scott Melker. I'm the host of a podcast called The Wolf of All Streets. I have a YouTube channel and such. But really, I'm just a orange-pilled crypto enthusiast who eventually got sick of the crap from our government and decided I needed something. And I found Bitcoin. And that's really I honestly, the more honest path to how I got to it was I was a trader. And I found out in 2016 about this magic internet money and these unicorn 1000x overnight meme coin pumps. So I came for the money, and I sort of actually backed into the use case and passion for it as, hard money and as an asset, and have sort of formulated my views on the different parts of the market since then. But it really actually, for me, took a bear market, like it will for many people, to gain my conviction. I had to convince myself a reason that I was there after making all that money in the bull market and then losing so much of it in that first bear market. And then if I wasn't already sold, COVID and the money printing and all that really increased my conviction to the level where it is now. So for me, it was not one of those overnight, I get it. I read the white paper and all of a sudden, I sold my house to buy more Bitcoin. It really took me quite a while. I came in as a trader trying to make money. Now I'm just a trader trying to make Bitcoin.
So I'll go first, Scott, if you don't mind. I'll just follow on what you said. What I love about what you said is the idea that it took some pain for you to go broaden the use case for this, because the impression we get is that most of the people or most of the conversation is just about the price performance. This is a story about upside. There's no other story that matters. Like if you were a guessing man, what percentage of all this moment right now are people that are just chasing the price versus people who are really taking time to learn the technology, the longer term use cases here?
I think it's a mix, but I'll dare say the most four dangerous words in investing, which is this time it's different. But I'll tell you that this time it's different only in the context of where we are in the cycle and where we are with price and what we are seeing from retail and sentiment. Okay? If you had asked me a few years ago, at this same point in the cycle, when we were topping at 65,000 and going all the way down to 30, then back to 69, I would say that we had this massive retail involvement of people chasing the pump, and we were blind to it because we were in the midst of it, of the FOMO like everyone else, and we believed that, you see the Wall Street cheat sheet, we were new paradigm, euphoria, global reserve currency, replace the world's money. You have none of that right now. Right? We were back at 69,000, but anecdotally, Google searches for Bitcoin or crypto, I should say, in general, are much lower, almost still at a bottom. that makes sense in the context, obviously, of the fact that most people know what Bitcoin is, so they don't need to Google search it anymore. So that's part of it, right? But I can just tell you, even my barber's not asking me about it. I haven't had an Uber driver tried to pitch me Dogecoin yet, right? And even the very small, even my parents haven't like texted me to congratulate me that Bitcoin made a new all-time high, and they track this stuff and watch my shows, right? So I don't think that retail is here literally at all. I think we're seeing very transparent inflows into the ETFs that are forced buying of Bitcoin in a thin, relatively illiquid market that's forcing the price up. And for the first time in history, we don't have to look at lines on a chart or figure out what's happening in the cycle or tea leaves and unicorn or whatever ways we all find our entries. You can literally see it's a $1.3 trillion market cap asset with hundreds of millions to billions of dollars every day in flows buying, right? And not only that, I guess we'll get into it more deeply. So maybe I'll pause there, but I will say that I don't think this is price pumping, chasing in this case. I think this is literally just the gates have finally been opened to a lot of people that didn't have exposure, and they're slowly coming in. And that slow action with a asset class this small is enough to keep the price moving.
Yeah. So Scott, I'd also say this is an example of dollar cost averaging and how that works, this asset class. Because if everybody did that or anybody did that through a bear market, they're actually profitable right now, or even a lot more than profitable. And then I'd also say, wow, you really do learn more from losses than gains. I think easy money doesn't teach you a whole lot. And so I actually think that any human being who experiences the bear market, either last one or the future, will be smarter as a result of it.
You hope so. Humans are pretty dumb. You have a lot more faith in humanity than I do, but you hope that you learn a few lessons by losing a whole shit ton of money. I mean, and to your point, I think I had a friend who used to have a quote. I can't say it exactly, but it was effectively that people who make easy money are just holding it for the next person. It's not really theirs, right? You're basically just the placekeeper for that moment in time before you hand it off to the next person. I think that's true. You know, I think money earned in the hard way or lasts a lot longer than the Lambos and watches that you make overnight on a meme coin pump, you know? And so I think there's a lot of truth to that.
So Scott, then, you know, having been through a bear market, as I have too, is your plan to scale back at some point, or are you still going to be committed because you've got it sized?
Well, I'll give you a couple answers. So first of all, that wasn't my first bear market. It was my second bear market in crypto. But I'm 47 years old, and I got absolutely annihilated in the Great Recession. I got absolutely annihilated in the tech bubble, right? So I've been trading since I was 13 in 1989. So that's the first time that I started buying and selling stocks. So it wasn't unfortunately, I was one of those humans who humaned and didn't learn my lessons through all of those cycles, which is why I can say that of humans being dumb, because I'm a dumb human. Hopefully a little smarter now. But, you know, I learned the dollar cost averaging lesson through the Great Recession because it was effectively the first time I had money again. I've told the stories a million times, but I went broke a number of times sort of trading, and I started to get money again in 2007, 2008, of course, right in time for the entire market to die. But I was dollar cost averaging into SPY the entire time, right? So literally I bought the deadest top, and for another half a decade or more, I'm trying to think of the price, I continued to buy SPY and was never in profit on any of it, you know, or certainly not, on my first buy. Obviously it bottomed and started to go back up. But then there was a point in where 2018 or whatever, I woke up and I was like, every single purchase I've ever made of SPY is wildly in profit, right? And so you talk about dollar cost averaging for Bitcoin. Let's talk about Michael Saylor, right? He was the ultimate chump to everyone in the TradFi world, and now he's the Warren Buffett of our times, simply by price going up and him continuing to buy. The man is up, has a $13 billion position through MicroStrategy. Who even knows how much? He's more than doubled his money by literally never looking at a chart, never thinking, by every single time he got money buying Bitcoin. And your average person could have done that with $10 when he was doing it with 100 million. And if you've literally ever bought Bitcoin as of Tuesday, okay, now maybe you bought it at 69,000 on Tuesday or the day it topped last cycle, but you're in profit. No matter what, right? And I talk about SPY, that took me a decade Bitcoin moves so fast that your bear market is like a year or two. Who cares? Like people, the problem is everybody's here for the casino and the quick gains, as Cynthia said. So you feel wrecked when you see your balance go down because you had these paper gains. But if you've been around for a long time and you view anything as a long-term investment, well, then waiting a year or two to be in profit is literally nothing. And that's the Saylor strategy. Now, you talk about me and my view. I was on Yahoo Finance yesterday. I wish that everyone could have seen her face when I gave the same answer, because she only saw it temporarily, but then they cut to me, I guess, on the feed, but I could still see, obviously, like the hosts. And she said, like, how do you establish price targets for Bitcoin, and what's your price target? And I said, my price target is death, and it can go to my kids. But if we want to talk about price targets, then I guess I can give you some like historical lessons, and here's maybe where we'll go in the cycle. But it kind of bothers me to even talk about like what's your price target for this cycle, because who's investing for 3 years? That's trading. And by the way, you have day traders, you have swing traders, but 3 years is still a trade in my mind. Investing is a decade plus or more. So
what's your price target for your primary residence, right? Same thing. Like you got to live. You're going to always need a place to live. You're going to always
That's
need
exactly right. And people think I'm nuts when I say that, but you ask a gold bug what their price target is for the gold that's sitting in a vault and they don't have one. That's also because the price of gold literally never goes up, and you can wait 100 years and it'll probably be the same price. But hey, what do I know? But so for me, I view Bitcoin as Bitcoin, as a correlated gold or your home, kind of the things you just said. But I participate heavily in the rest of the market, which I view as speculative VC investments that are likely to go to zero, 99% of them. So that's a game of hot potato that I'm using to make money. Right. And so like, it doesn't mean that I view all crypto like I do Bitcoin, but Bitcoin, I have no interest in selling because I would rather give my children a hard asset like a house or something than a bunch of cash that's slowly losing value, which I will inevitably, hopefully be able to give them as well. But so for me, maybe I'm a little too orange pilled and I don't intend to really sell Bitcoin. But I actually went on a rant this morning on my YouTube show to that end. That works for me. But like we have this strange religious fervor in the Bitcoin community that's so insane it almost pains me to have to discuss it, that like you can never sell. Like imagine your children are starving, but like you've been so corrupted by the religious mentality of the Bitcoin community that you still won't sell your Bitcoin to feed your kid, because there's a lot of people that are like that, right? And at the end of the day, this is still an asset and it's made there. If you make profit on something, you should be using it to better your life. For me, bettering my life, because I'm fortunate enough to not have to sell it, is holding that Bitcoin. But for a lot of people, bettering their life might be to put food on the table or pay their rent or just take profit and buy something nice that they never thought they could have, right? I don't think there should be a downside to doing that. So that was a very long-winded answer to your question. But I think that it's clear that dollar cost averaging into this asset class over time through the cycles is the way to go. And then you take the emotion out of buying $17,000 Bitcoin when you previously saw it at 69.
Yeah, David.
I think at one point last week when we had that 10% intraday pullback from like 69 down to like 60. Tuesday, right? I heard something like 300,000 accounts got wiped out because of leverage. So maybe not do that, but honestly, I think that's a healthy moment for this kind of asset class, and especially in this kind of rally. Like these things can't go one direction. Can we talk a little bit about the retail flows though? So the two data points that I have are, one, the buys have been small, so it's very much coming from retail, and two, small individually, massive in scale. Like I think a couple of days ago, the collective Bitcoin ETFs had more volume than SPY and QQQ. And so it is somewhat correlated with movements in the queues right now. It's kind of like a triple long queue. I do think the flows will somewhat mirror the market because of that. What happens in like a 10% queue correction? Like, are the flows going to continue through that in the short run, or are you just not as focused in the short run on those flows?
Well, this is what I can tell you. We had, as you said, we had a 10%, more than 10% correction, 15, 16% correction in Bitcoin in a matter of hours, which is insane when you think about it. But a $10,000 daily candle from 69,300 on the break of the all-time high back to 59,300. But that was $1 billion in leverage and all of those accounts that you just talked about. And those are the casino idiots who are getting liquidated and losing all their money. Think about that, right? If you lost your entire account, that means you were trading with high leverage and no stop loss. So that doesn't even account for the people that were responsibly trading with leverage and stopped out and had money left in their account, right? You're talking about people who literally had no plan, bought with leverage, and got liquidated and wiped out. But what happened on that same day in the ETF? Blackrock had its record day of inflows into IBIT, over $700 million. The price of Bitcoin went down $10,000, but we had the biggest volume day and net largest inflows into the Bitcoin spot ETF underlying it. So you know exactly where that dip came from. It came from the perpetual swaps on foreign exchanges like Binance, BitMEX, etc., and degenerate crypto gamblers losing their money, period. Had nothing to do with retail. And if you're wondering when these flows will die, I don't think it's that correlated to NASDAQ. So we have this idea that it's correlated to NASDAQ. We have this idea that it's digital gold. You can't square any of those circles, right? I mean, this asset has been so many things at so many times. It has been correlated or uncorrelated. If you look at the historical correlations of Bitcoin over a 10-year period, it's like 0.16 to stocks, including tech. So no correlation, right? For anyone who doesn't understand, correlation is measured from -1 to 1. Closer you are to 0, the less correlated you are. If you go negative, you're inversely correlated. So a lot of people would say you might see a negative correlation between, for instance, the dollar and stocks. Like the DXY is obviously often negatively inversely correlated because if it goes up, everything gets wrecked. Right.
But
so Bitcoin
periods of positive correlation, right? Like post.
But what is a period of positive correlation mean? Think about
when
that.
Volatility spikes. When volatility truly spikes.
Okay, but then it becomes uncorrelated again and floats right back off, right? So like if two people take a random walk in a small park, eventually they're going to meet each other and walk together for a little while. That doesn't mean that they're best friends and that it's correlated. I don't view, like, if you look over any meaningful time frame at the correlation of Bitcoin to any other asset, this is an uncorrelated asset mathematically. So yeah. I listen, it's been wildly uncorrelated to stocks for quite a long time now, right? I mean, I don't even know how to further explain it, but I will say to you in your defense of what you're saying, I don't think it's necessarily correlated to the Qs right now, but all of the buying of the spot ETF that needs to be done happens generally during market hours. So you do see action when the market opens now, right? Because you might see these inflows, but that's an inflow that's first being seen in the ETF itself, but then they have to go buy that Bitcoin, right? So that makes a lot of sense.
So yeah, I am on his side. I am definitely.
No. I know you are.
But I would say that I look at it as like that reversal, right? Like that rebound from crypto, like I look at it as it's actually tied to an event, and that event is the Fed overreacting, printing money, and then crypto responding to the printing of that money in response to the drawdown of the market, which we just kind of...
You mean that specific day on Tuesday? You mean that because the Qs did...
Just in general, the last 15 years, right?
Like, right, yeah. Okay, because the Qs had a bad day on Tuesday, right? And so it was like the worst day they had in a while, and Bitcoin went down 15% or whatever it was, and everyone was like, that was because of the Qs. But like, you can't ignore the fact that Bitcoin hit 69,000 for the first time in literally years at an area with the highest leverage and open interest built up that we've historically literally ever seen, with longs paying the highest funding rate to be long ever at the most key level, right? So yes, those two things did happen in the same day, but causation and correlation, to me, like I could have told you very clearly that, holy crap, we're going to see some serious volatility if Bitcoin hits 69,000, right? And to me, what's the most meaningful part of that isn't the 15% correction. It's that we're sitting at 68,000 today, 2 days later, and it's like it never happened. It was a leverage flush, right? And so I do think Bitcoin could have some downside if we get a major stock market correction, because all correlations go to one in a black swan event, to your point, right? And we've seen it a million times. But let's take, for example, March 12th, 2020. That was the day that Bitcoin died, right? We all saw Bitcoin had been sort of, unfortunately, trading sideways at 6,000 forever, which was very bad when you were on the way down from 20, but people were convinced 6,000 was going to be the bottom. COVID hit, and there was that day on March 12th that Bitcoin dropped from 6,000 to 3,000. And for anyone who wasn't there and wasn't paying attention, there's an exchange called BitMEX. And for anyone who doesn't know, they had an extremely inefficient liquidation engine. And there was so much of a selling cascade, not people actually selling, but If you're long and you get liquidated, that becomes a sell order on the order books, to anyone who doesn't understand that. But there was no one to buy. So they were getting these 5-10 million liquidation orders, and there was nothing to buy. So literally, they went offline for maintenance issues, but it would have literally sent Bitcoin on that exchange on that day to zero. Like, there was no buyers, and forced selling that was a part of their busted ass algorithm, right? And so that was terrifying. But what happened after that? The stock market bottomed 10 days later, I think, right? COVID peak, going to zero. We all remember it. And the world touts the incredible stock rally from the bottom of March 2020, right? It doubled from there, like before we saw the meaningful correction.
And 19th was the Fed announcement, right? The 19th was the QE Fed announcement on a Sunday.
Correct. But what did Bitcoin do? It went up 17 times, right? It went from sub 4,000 to 69,000. So where do you want to be if we do get one of those highly correlated black swan events after it happens? Which dip do you want to buy, right? And so that's my answer to that. And that's my answer to the correlation. Sure, we'll be correlated for a couple of weeks if things go really, really bad, but which dip do you want to buy? And to me, it's the thing that's going to go up could go up 17 times, and not the one that maybe will double.
So you mentioned Michael Saylor, and I'm a huge fan. And I remember December 20 when he raised money to the bond market, and then the two subsequent deals thereafter in 21. And some people now are saying, well, how is he doing this? Why is he raising money? And is it a top? And I look at it like he's raising money at basically 100,000 Bitcoin right now when it's at 68,000. What are your thoughts around the deal? Because to me, it seems like a wonderful gift.
The guy is a genius.
5/8 of 1%, crazy.
He actually, long before he was doing any of this, when he first bought Bitcoin for the first time, we had a mutual friend that I got him to come on my podcast, and he broke down for me like the rich person's playbook, having never raised anything and having never done anything. MicroStrategy had just bought Bitcoin. He had just been orange pilled, right? And he broke down that effectively the basic playbook where, rich people get their yachts and their property and their stocks and all these things. And because they have favorable terms with bankers, they effectively just take and this was ZERP-ish, right? Still. So, and they just take really low interest loans on everything, and you never sell anything, and you never trigger a tax event. And when you die, there's a trick to hand it off to your kids. Basically, the trick is get a bunch of expensive stuff, take really low interest loans on all that expensive stuff, never sell anything, continue to get favorable terms on those loans indefinitely, and move on with your death, not with your life, right? And so if you extrapolate that sort of thinking, and then he literally laughed. He's like, I got 5 yachts, I got 4 houses. He's like, good luck coming to get my yacht that's sitting in Monte Carlo if I default on my loan, right? So it's kind of like they laugh at even the idea that it's a real loan and anybody cares, right? So it's all he's doing here, effectively, right? And the thing is, like, if you understand his premise, he wants to get rid of dollars anyways. So like low interest rate loans on these dollars that he can use to flip into Bitcoin, which eventually goes up. I mean, we had all this speculation in the last cycle. You were around, right? It was Bitcoin hit 25 on the way down. They're like, he's getting liquidated at 21. It's all over. MicroStrategy said, right? And then they're like, oh my God, his liquidation price is 17 because crypto people are so stupid, right? And he literally laughed. He's like, you guys don't understand how any of this works. He's like, Bitcoin can go to 3,000 and I'm fine. Literally. Right? Like, I can take more loans. I can refinance this loan. I can take this loan and flip it into that. Right. So exactly what you said. Like, he understands the game. He was a billionaire before he found Bitcoin. Right. So this is not like a new playbook for him. He's in a rare position where he has a publicly traded company, but has all the control. Right. And so, like, people ask, why haven't more companies done this? Because they have boards that aren't going to be bullied. Right. Or that can't be convinced by such a enthusiastic leader like him. But, I think it's brilliant. And at this point, also, like, it may have seemed risky at first. Now you're asking about doing $600 million now when he owns $12 billion worth of Bitcoin. Now this strategy, like, he's been, sort of vindicated. It's risk-free. Yeah. I mean, but you have no idea how good he is at this and how convincing he is. If you like sit in a room with him and listen to him orange pill people, like he's the guy that crypto needs in every room with every board member, convincing them to buy Bitcoin. I mean, he effectively convinced Elon Musk to buy Bitcoin, right, for Tesla. So he's incredible. Yeah.
My understanding was this was actually, if I'm not sure what the past debt issuances were, but this was a convertible, right? So it's like playing the fact that MicroStrategy is essentially trading above book value, right? So that's what a lot of people are saying, that in this environment, it actually makes sense to get cash by essentially raising equity, which is the form of what he did right here. And so he was kind of playing on that overvalued book value here, right? So it's just good business governance almost.
Yeah, I mean, what a big MicroStrategy was up like 35% that day or something. I don't remember the exact number, but yeah, it's like, okay, easy. It's like literally you wait for those moments. It's like just waiting for the second to do that. I was at the Bitcoin, just total side thing. I was at the Bitcoin conference maybe 2 or 3 years ago, and I'm sitting there interviewing people, and mutual friend, this guy Richard Byworth, comes up and he's walking and he's like, I'm like, I recognize the guys with it. It was Mauricio Macri, the president of Argentina, where he had been the president like a month, a year before that. And Richard comes up to me, he's like, you know Saylor, right? I was like, yeah. He's like, I want to orange pill this guy. Can you get a meeting? And I'm like, I know Saylor, but I don't like know him like that. But let me call his friend, our mutual friend Eric, and I call this guy Eric Weiss, and an hour later, we're sitting by the pool at Saylor's house with the president of Argentina, former president of Argentina, and like a select group of 3 people. We sat down. Saylor says to him, I have 30 minutes. Like, not the president saying that. Saylor says, I have 30 minutes, and did not take a single breath or let another person say a word in 30 minutes. Macri stood up and goes, that guy is amazing. What on that or something to that, and walked out of the room. And that is it. They didn't exchange numbers and shake hands, and the guy was the orange pilled, right? And so it's pretty, like, if you know Michael and you've seen it in action, it's insane.
Yeah, no, he is absolutely amazing. And yes, I've been at that pool and know Eric as well. But the interesting thing that I find about Michael in this context is he's been very careful over the 30 years at MicroStrategy in not issuing shares, right? So there was a pivotal moment, maybe through Eric, because Michael seems to give Eric the credit, where he had the epiphany, and now he's willing to make the bet that he's willing to make. And a lot of it was a function of what does he do with $500 million in his treasury, because it's just eroding. So.
Yeah, that was it. Listen, choose an asset, but you better choose an asset, right? Because your dollars aren't gonna out. Your purchasing power of your dollars is not gonna outpace inflation most likely. But it's like you said, the level of conviction. Listen, it was a huge gamble at the beginning. Now it's like I said, yeah. Of course, he's like the Warren Buffett now, and now he can take these loans, and everyone's willing to send the guy cash because he looks like a genius. But it was risky at the time, right? And he looked like a zealot.
And did you notice now MicroStrategy is called, in their press release, the first Bitcoin
development company? Yeah, I love that.
I love it.
And it's literally just like a one-way Bitcoin fund. Like, all we do is buy Bitcoin. It's incredible. It's like he's going to get so incredibly rich. He'll be one of the richest men in the world, in 10 or 20 years if Bitcoin continues to cycle like this, and he'll have done nothing but buy Bitcoin. It's not like he created electric cars or Amazon,
But the interesting part about what he said to me also was, if I buy a company with my stock, I'm taking operational risk. He's not taking operational risk.
And also he has the foresight to understand, especially now with the ETF, that it's going to become pristine collateral itself. So that same playbook that we just talked about endlessly, he'll never sell his Bitcoin. He'll just be able to take low interest loans on his Bitcoin to buy more Bitcoin and continue. And it's going to be that same thing, but with now this $12 billion, Scrooge McDuck hoard of Bitcoin sitting in his bank that will then become collateral for more low interest loans to buy more Bitcoin that becomes more collateral and endless.
Yeah, so we own a little bit of the senior loans, the senior bonds in Block, which arguably at 96 probably almost like money market, yielding 5-6%.
5-6.
But here's a question for you, and this came from the audience off the chat. What about quantum computing? Is that a concern for you? Because
yes, it's a huge concern for me, because if someone gets a quantum computer, they can launch nuclear weapons or blow up the entire planet. If we get quantum computing and someone can hack the Bitcoin network, we have much bigger problems than the Bitcoin network with quantum computing. And anyone who thinks that the first thing the inventor of the quantum computer is going to do is go steal some Bitcoin has lost their damn mind, right? A bad actor who has access to that can literally hack anything on the planet. So no, yes, it's a massive concern to me as a human being, but it's zero concern to me for the Bitcoin network. It's kind of like, we have all these Bitcoiners that are like, I want Bitcoin to become the global reserve currency. I want it to replace everything. I'm going to have my hoard of Bitcoin. I'm going to be the richest person in the world. And I'm like, dude, you're going to be living in Mad Max, literally with your army of strange white-faced like mutants going to Gastown. But yeah, your Bitcoin will be worth a lot. Nobody wants that, right? I mean, so like, as much of a Bitcoiner as I am, I don't want to live in a world where the dollar's collapsed for my Bitcoin to be valuable. And so I also don't want to live in a world where like, North Korea gets quantum computing and launches the United States nukes at Russia, and then my Bitcoin goes down, right? So no, it's not a concern to me in like the specific context of Bitcoin.
One of my favorite questions that I get, and sometimes I've asked, are miners concerned about what happens when the last Bitcoin is mined? And the answer that I love the most is, I'll be dead. Doesn't really matter.
Yeah, it matters, right? And so, we are talking about 150, 170-ish years down the road, but actually something that's really interesting that's happened this year. There was an upgrade called Taproot that opened the door to smart contracts and other things on Bitcoin. It's complicated, doesn't matter, but basically someone found a loophole after they did the Taproot upgrade, which was agreed to by all the miners, and that allowed for effectively to build all of the types of things that have been built on Ethereum and elsewhere on Bitcoin. So you've seen this absolute Cambrian explosion of building on Bitcoin. Ordinals, you guys may have heard of, which are effectively NFTs on Bitcoin, BRC20 tokens, literal meme coins exploding all over on Bitcoin. Bitcoin Maximalists hate this, by the way. But there have been already times, even with this small experimenting with it, where the fees for miners have made more money than they do by securing the network and actually mining blocks by transaction fees and doing all this. So it's answered that question this year. That question is now null and void because there's so many things that people can do on Bitcoin that also require the miners, that have made the miners more money even than actually mining Bitcoin and securing blocks. So it's really fascinating how that sort of has happened. But listen, we go every 4 years, we see like mass miner extinctions because of the halving, which is coming in April, right? Only the most efficient, the largest, the most capitalized miners can generally survive. It may be different this time, though, because price is so high at the halving this time that they actually all have money, which is interesting. So you usually see this sort of like 30%-ish drawdown after the halving for various reasons. Some would say it's probably because everybody gets hyped for the halving, then you realize like nothing's literally happened. It's going to, you cut the supply in half, but that shouldn't matter for 6 months. That's why 6 months later, you usually see the new all-time high next November or next December. But in that context, miners are selling Bitcoin to remain solvent and to survive until price is high enough that mining is profitable again, now that the rewards are halved, right? So for anyone who doesn't understand, you get a reward for solving this complex math problem, and that mines a Bitcoin. That's the very simple explanation. Well, that reward gets cut in half. Or you can say that that reward gets cut in half every 4 years. So if you're making $10 to mine a block and spending all this money, now you're making $5, right? And so most of the miners, small miners, they don't survive that. So only the ones that have well-capitalized businesses, that own their own infrastructure, that have low electricity costs, and who have a big balance sheet generally survive. Well, this time, the miner floor, from what I've seen, meaning like where they would cease to be profitable, is sub $45,000 Bitcoin right now, maybe 47. So if prices are anything like they are today, we're not even going to see miners going out of business at the halving, which is crazy. So I think that things have changed a bit for mining, and there's a lot more ways for them to also make money sort of down the road, and we're going to see that continue. I mean, the stuff being every day I get like 30 pitches for some layer 2 on Bitcoin. They're all cash grab nonsense, to be clear, just like everything else in crypto, probably 99% of it. But there's going to be some serious things built, and there's going to be a lot of solutions for how slow and expensive the network is.
It sounds like you're pretty much a Bitcoin maximalist. That you don't have much exposure to other cryptos or
tons. I own over 100 other coins. I'm massively exposed to the entire market, but Bitcoin is the only one that I generally really care about. Like I said, the rest of them are trades. It may be a 5-year trade. It may be a 10-year trade. The way I generally approach these things, is first of all, I try to invest in a lot of this stuff in the bear market when it's really low. Maybe it's some deal flow where I get some kind of like early access or I know about it first. Obviously I'm an investor, an angel investor, but as the bull market sort of continues, I sell all of these things not called Bitcoin. And then I might leave 10% of what was left. It goes into my investment portfolio and it's a call option indefinitely for the future. And some of those go up 1,000 times and some of them go to zero, but I've made my profit. So I like to play with the house's money on what becomes my investment sort of portfolio, which is the bulk of which is Bitcoin and Ethereum. I mean, I am uncomfortably bullish on Ethereum right now and have been for the last 9 or 10 months. So I've been buying that all the way to the bottom at 800, which I should be like viewed as the Michael Saylor of Ethereum. I get no credit. No, I'm just kidding. I've been saying I write newsletters, whatever, and this has nothing like Ethereum sucks to use, right? So this should give you an idea. I think Bitcoin's amazing for all the reasons I think Bitcoin's amazing, but I think Ethereum is expensive, it's slow, using layer 2s is kind of complex. I think they're going to solve a lot of that. But as a trade, it generally performs exceptionally well after Bitcoin finds its top and sort of consolidates. You just see the flows into Ethereum. And Ethereum spot ETF is the next narrative. There's a massive upgrade next week that nobody's talking about coming to Ethereum that's going to make transaction fees on layer 2s effectively zero. And so I've been screaming from the mountaintop since Ethereum was 800 that like, this is where you're going to want to be. And now it's catching up. But you even saw it. I don't know if you guys remember the day before the spot ETFs were approved, there was a fake tweet from the SEC. They got hacked. So you guys may remember that. So the SEC, who are so good at protecting consumers, and really are one of the highest quality agencies on the planet. I love them so much. I hate the SEC. They had a fake tweet that went out and said Bitcoin spot ETFs have been approved, right? And what happened? You guys remember what happened with price action? Ethereum went absolutely ballistic to the upside, not Bitcoin. Ethereum went ballistic to the upside because the second the Bitcoin spot ETF approved, crypto traders and hedge fund guys are such degenerates that they immediately poured their money into what they viewed as the next narrative. So I was already ahead of that personally, but seeing that confirmation that I was not the only one out there, is I was just saying the quiet parts out loud for all those months. Really, I think, Ethereum 10, 12, 20,000, none of that would surprise me because I just think that people in this market see Bitcoin and it goes up slow. And then if it stops for a week, they get bored and they're going to go find somewhere else to put their money. And Ethereum is the next spot. But like I said, I'll sell some Ethereum if it's going up to those levels. I want to hold my Bitcoin,
So I have a question from actually somebody at Fidelity Places. Assuming somebody's got a 60-40 model, what's the appropriate allocation for conservative, moderate, and aggressive account in your mind?
I think any RIA that's recommending a 60-40 portfolio after what we've seen over the past couple of years, it should be shot and or take it out to pasture, blue factory, go.
But that's the context of the question, Scott.
That's correct. So I want to first say that the 60-40 portfolio was already insane before we even saw that because you should own hard assets. Like a gold bug would have screamed at you that a 60-40 portfolio was stupid even before we had Bitcoin, right? So I have a chart somewhere, but there's been a lot of studies, even by Blackrock, that nobody seemed to notice years ago that showed what happens when you put Bitcoin in a portfolio to your Sharpe ratio. And spoiler, the more you add, the better your Sharpe ratio. So my argument and the way that I've orange pilled a lot of people who hate Bitcoin is just to say, here's the math. Even if you hate Bitcoin, it adds it's the holy grail for your portfolio as a small percentage because it has idiosyncratic risk. There's a chance that if other things go up or down, it will do something different. I'm not saying it's going to go up. I'm just saying it'll do something different. And that's what you want in your portfolio. So Bitwise, I spoke with them today. We obviously have one of the ETFs that's been approved. They said that they had 3 RIAs today, one $1 billion, one $2 billion, one that's $700 million that's starting within the next 2 to 3 weeks, who didn't even think about Bitcoin before, generally will be recommending and will be allocating 1% to all of their funds. We saw Fidelity's strategy in Canada, so Fidelity Canada, not Fidelity United States. They've added up to over 1% to their most conservative funds already in Canada, understanding this math. What happens when Larry Fink, the most powerful person in the world probably, who's been calling Bitcoin a flight to quality, who led the charge for Bitcoin spot ETF, who's 576-1 in ETF approvals, who's filed for an Ethereum spot ETF, if you like odds. What happens when he says, BlackRock thinks you should put 1% in your portfolio? Because he will, right? What happens when, and every RIA gets in line and all the sheep come in and they say, yeah, Larry said it, they're going to do it. Oh, and by the way, in one of BlackRock's funds, they've just filed to add allocation of Bitcoin into one of their larger funds. So the simple answer is
$36 billion strategic income fund from BlackRock.
Correct.
Just filed to add Bitcoin. Yeah.
So I'm not making this up, right? This isn't like some tinfoil hat theory. It's happening. And so get 1%, get off zero. That's my answer to you. Like an RIA should be saying, hey man, get off zero. Here's the math, allocate 1%. 5%, I think, is where you start to get aggressive. For a conservative investor who's not down the rabbit hole, doesn't care about it, right? So for being intellectually honest, most people who are going to buy it, circling back to the beginning, Cynthia, they probably just want to make money, right? They're not handing it. You're not buying the ETF to give it to your kids, right? You're buying spot Bitcoin and self-custodying it if you're one of those people. So anyone buying the ETF is buying it through the same lens as they view everything else in their portfolio. TradFi in general. And so those are the people that you need to show the Sharpe ratio and show what it does for your portfolio and say, listen, even if it goes down, it might be helping your portfolio, like your Sharpe ratio, right? So that's the argument I think most RIAs are going to make. I don't think, they're going to do the Saylor thing, but 1%, start there. And then trust me, nothing is a better marketing for any asset, but specifically Bitcoin, than higher prices. Higher prices beget higher prices because nobody wants to buy Bitcoin when it's $17,000 on the way down from 69, but damn, do they love it when it's back at 69 again. People will buy 3-day-old stale bread at the store for a 14-cent discount that's going to be bad, but they will not buy a stock or any asset that's 90% on sale. It just won't.
Is that going to be the same argument for Ethereum ETFs, you think? Just the same Sharpe ratio, or there's a different pitch here?
I don't think so. So listen, like I said, I think that there's a trade to be had on the narrative of the Ethereum spot ETF being approved, but I don't think there's enough mainstream awareness of it at all. And I think the buck for TradFi for at least this cycle for a while is going to stop at Bitcoin. I think you might get a few people, BlackRock will be talking about it if they get approved, right? Because it'll be BlackRock. So I think it'll help. I think it's a great trade. But as much as I love Ethereum, I don't foresee that being a part of the get it in everyone's portfolio conversation anytime soon. I don't even think people understand it. I think Bitcoin to most people is like Xerox, you can make a copy on a million different kinds of copiers, I'm sure, but everybody calls it a Xerox copy, right? So the entire market is Bitcoin, I think, to your average person, if they've even heard about it yet. I haven't even heard anyone talk about what it does for your Sharpe ratio yet, right? Even the people that are down this rabbit hole are still focusing on let's get Bitcoin into people's portfolios. And even anecdotally, we can say this, we had the Bitcoin futures ETF approved, which happened to have been a market top at that time years ago, BITO, and it did $1 billion in inflows faster than any ETF in history, right? So that was a futures product, a crappy futures product at that versus what a spot ETF would have done. And it slowed, but of course it was extremely popular. It was at the top of a bull market, so that's different. But we had an Ethereum futures ETFs, a series of them approved recently, and it was dead on arrival. Nobody cared, nobody bought it, zero flows, nothing. right? And so that should tell you at least something, right? That the financial world wasn't like on fire waiting for these products to be approved. We've never seen anything like what's happening with the Bitcoin spot ETFs. I don't know if people are really aware of what's happening, but first of all, you had this strange, the Cointucky Derby, as the Bloomberg guys were calling it, like this strange thing where you have 12 of them being approved at once. You've never seen that with any other asset. You've never seen the circus around it. But take all of that out. I mean, we're at $53 billion right now in total market cap for Bitcoin spot ETFs, including GBTC, which is roughly half of that, and obviously was already a fund before. GLD is like $57 billion, right? I mean, it's insane.
That 2-month flows into the 9 Bitcoin ETFs, if you take GBTC out, is bigger than the last 5 years of flows into physical gold ETFs. I mean,
yeah, I think it's like 10 billion or so. I mean, it's really insane. So at the beginning, obviously, everybody said this is just money flowing out of GBTC, people searching for a lower, like there were a number of reasons people wanted to exit GBTC, right? They couldn't get out before because it was closed-ended fund. They had, literally there were no unlocks. So there were those people. There were the people playing the GBTC discount trade. For people who don't know, GBTC was such a crap product. It was literally trading at a 50% discount at one point. Oh, and by the way, when it was trading at a 50% premium and everyone was doing the cash and carry trade, that's what destroyed the entire crypto market that nobody talks about, because that's how Three Arrows Capital lost their money. BlockFi went insolvent. All these companies, it wrecked all of them, right? The GBTC trade, it goes really bad when it goes to a discount and you're sitting there locked in. But those outflows lasted a week or two. Price went down a bit. That was the sell the news event, which is very fundamental. But once that reversed, I mean, it's just been insane. And people look and they go, wow, GBTC has 27 billion. They had 27 billion before that. Where did all those outflows go? Well, the price of Bitcoin is doubled, guys. So you're also, when you talk about these, the AUMs here and the market cap, of course, they benefit massively from the price of Bitcoin, right? The value of them. So a lot of Bitcoin has left GBTC. It's just that the Bitcoin that's left is worth a hell of a lot more, right? So it's just for people who don't understand that. But like 53 billion.
Yeah. David?
Yeah. So, I mean, look, we talk a lot about the flows to come from advisors, from funds allocating. We talk a lot about the flows that we've seen coming from the retail space. What I'm most interested to see is the other end of it, right? Right now, you have to be a crypto bull, like really to allocate, right? You're a pioneer, but I actually think as quick as 75,000 on Bitcoin, somewhere between 75 and 100,000, your job actually gets put in jeopardy if you're an advisor and you're not doing it, right? So once we hit that mark, somewhere between 75 and 100, it's going to happen, and that last client's going to be like, are you sure you want to bet your career on hating Bitcoin? Is it worth it to have a 1% allocation to not bet your career on hating Bitcoin? It's no longer like the maxis allocating. It's the people who just don't hate it.
Yeah, you should ask Elizabeth Ward and Gary Gensler that question, because it's gonna, because
she'll be buying options.
Yeah, she'll have some sort of information. Yeah, she'll be having Nancy Pelosi as her RIA. But I think that we talked about that actually quite a lot in the last bull market, and we were just early. That exact same notion, because we didn't have the products. But we went from this point where a CFO or anyone with a fiduciary duty who's managing a treasury or an endowment or any of those things, like, there would have been major reputational risk for them walking into a meeting and saying, we should think about this Bitcoin thing. Like, you'd be the crazy dude who got fired for even talking about it, right? Kind of like the 60-40 portfolio, right? Then as it got into that bull run and went up into the 60,000s the last time, and Michael Saylor was making all this money, and then it was like they were getting the calls. So what do you think of Bitcoin? And there became a reputational risk to at least not having an informed answer, right? It didn't mean you had to be a bull, but you had to have an answer. You had to tell why you weren't, right? Or you had to have an opinion. Now, to your point, with numbers this high, with it coming back to this point, with the ETF being approved, which is like tacit approval that it's a legitimate asset, right? That's regardless of even the flows, the fact that this thing got approved. Your average person doesn't know that Gary Gensler literally like cried on his way home after it was approved and like had to cope endlessly and say that it was just because of the courts and he respects the legal system, but we don't like Bitcoin. Same guy who lectured on the power of Bitcoin at MIT, for anyone who's paying attention, if you don't think his opinion changed for some curious reason. Elizabeth Warren. Now your average person looks and they're like, it's a legitimate asset. It's been approved, right? Now they don't have to have. There was Bitwise did a study a week before the Bitcoin spot ETFs were approved of RIAs, 6,000 RIAs. They do it with a company called Fedify. They do it every year. And I don't want to quote the numbers completely wrong. I had them in my head at one point, but basically only 37% of RIAs surveyed believed a Bitcoin ETF would be approved ever. Not like next week, ever. So as much as the Bitcoin community was like, this thing's getting approved, we've been following this like the Super Bowl, we knew it was going to get approved. But your average RIA who didn't understand it was like, they're not approving a Bitcoin ETF. That's nonsense. So 37% of them didn't even think it would get approved. Only 19% said that they had a way to even give their clients exposure to it at that point at all. So not even even if they wanted to, right? And most of them didn't. So what people aren't realizing is that you're at a point now where they didn't even start vetting these or doing due diligence until the approval. People wanted to believe that they were all looking at Bitcoin. And by the way, there's a cynical answer to that, which is that even if they love Bitcoin, they couldn't make money putting it in your portfolio, right? Now they can make money putting it in your portfolio. They wouldn't send you to Coinbase and tell you to go buy Bitcoin, right? Because they don't make money on that. So now they make money on it. So they're really interested. But we're seeing extremely slow trickle of unlocks, which is why these flows should continue, because it wasn't the opening of this huge faucet where everybody all of a sudden had access to Bitcoin. That didn't happen, right? Parsing Group made huge news a week ago. They're 30 billion asset under management RIA, and they approved 4 of them for their clients. You have to realize the bulk of RIAs have not even opened these to their clients. The ones who have are only taking it unsolicited, and they're not selling it. So they're not soliciting. It's only if they get a call. Go ahead.
Yeah. So one of the things, I took the DAX CFP class, and, Rick Edelman does a really good job presenting the case. And one of his points that I think is so important is that as part of somebody's plan, you've got to ask the questions about annuities. You've got to ask about 401ks. Why not ask about Bitcoin and crypto assets? You're actually not doing your fiduciary responsibility if you don't ask.
I agree. So that's what's coming. And that, I think that's exactly the point that David put more eloquently than me. And I think that I think we're already at the point, David. Maybe it's not even 75 or 100. I think it's like, holy crap, Bitcoin's at an all-time high. But you're not seeing the headlines. Are you guys seeing headlines? Maybe my head's in the sand but I don't see this all over the mainstream media that Bitcoin's back at its all-time high. Last time, it was the only thing they were talking about on CNBC and Fox Business. It was like complete insanity. So maybe it does take it. Maybe it does have to go a bit higher.
It's either that or it's just like that. Like, I think the news is always focused on what is the biggest 3 to 12x over the last 18 months. And so like the semiconductors are just like stealing the show of crypto still, I think.
I love that.
We'll see if that continues or not. But wasn't it like, I think it was SMCI and MicroStrategy were 30% of the Russell 2000's entire year-to-date gains, and then MSCR jumped into the S&P 500, and now all your 401k dollars are buying MSCR at like $1,000. And yeah,
that's like my favorite thing is that people are all passively invest, obviously, through like 401ks and IRAs and mutual funds that they buy. They're retirement targeted, and the same people who are like, I hate Elon Musk, I would never invest in him, or I hate Mark Zuckerberg, Meta's the worst, Facebook is a plague on society, don't realize that like a massive part of their portfolio is exposed to both of those guys and their companies. And it's going to be the same way for every Bitcoin hater. They're all going to hate it, but these ETFs are going to be allocated into all these strategies, and they're going to be buying Bitcoin, and it's going to be helping them, and they're not even going to know it.
Hey, Scott, we're approaching the top of the hour, so I wanted to ask, like, we all follow you. We follow a lot of folks on this space. Is there anybody who has not taken the orange pill, who is not necessarily a naysayer, but somebody who still has some doubts, that is somebody you still respect in terms of their opinion, what they bring to the space? Or, put it differently, is there any bear case to Bitcoin at this point, or is it just there's no way but up?
There's always a bear case. I don't care what asset you love or what it is, whether you see it or not or admit to it is a completely different story. There's always a bear case to everything. That's important. Listen, I'll give you a name that is going to be very unexpected to crypto followers. Peter Schiff. He's perhaps the most vocal hater of Bitcoin that we have, to a level that seems so emotional and irrational to the rest of us. But if you listen to 99.9% of what Peter says, he's brilliant, right? And he totally understands how the system's broken and what's wrong with it. He just stumbles, in my opinion, at the finish line of whether it's gold or Bitcoin, and then takes that to like an exponential level by his outright hatred for Bitcoin instead of just like a passive disinterest, right? I can't tell you why it is, but like, I love the guy, and I would love for him to one day become a Bitcoiner, because I think all the things he says aligns exceptionally well with what Bitcoiners believe, who are really hardcore Bitcoiners and believe in the asset. Oh, and by the way, I think he just released his second ordinal collection yesterday on the Bitcoin network. Yeah, he minted ordinals, and if you listen to him, he's like, Bitcoin's vaporware, but blockchain. It's like, I get that. I can make money there, right? Yeah, so he literally, like, the ordinals, the NFTs on Bitcoin I told you guys about, he's the most vocal hater, and just released his second collection. And they're doing exceptionally well. They're selling for like 20, 30 grand or something. I think it's crazy.
So should
Wow,
we, guys, you want to wrap, Dan? Go for it.
Yeah, go ahead. You go ahead.
No, I wanted to so give Scott, you want to take an opportunity to, where can people read your newsletter, access any of your work, just follow you on Twitter, any kind of self-promotional, shameless pitch you want to make? This is your moment.
I'm the worst at that. I'm at Scott Melker on Twitter, and anything else you want to find should be linked there one way or another. But yeah, I stream daily on YouTube now, almost twice a day. I have a Twitter Spaces every morning, 10:15 a.m. with Mario Knopfel and Rand Nooner called Crypto Town Hall, which is really, it's massive. It's great. So you can find me plenty of places.
That's awesome. Thanks so much, Scott, for joining us today. It's been a great time. We'll see you around. We'll see you around social media, and thanks everybody for joining us. We'll see you next time.
Get Michael in here next time, guys. I don't have to be Michael.
Thank you, Scott.